Good afternoon. Good afternoon, guys. Good afternoon. Good afternoon. Yes, I had my lunch. Good afternoon. Yes, yes, I did have my lunch. I hope you all had your lunch as well. Yes. Let's start. Good afternoon. Good afternoon, guys. The ones who join in late. Hi, hi, hi. All right. So, shall we begin?
ಹೆಲ್ಪ್ಲೈನ್ ನಂಬರ್ 14410 ಅಥವಾ
Okay. I should. Yes. I should. Ma'am, shall we begin? Are we ready to go?
Yes, sir. Yes.
Okay. All right. Good afternoon, guys. Welcome back. Now we're going to start actual, discussion about exam and some questions. I gave you that in the morning. It was more about telling you, guiding you about what you should be studying for the first chapter. Now we're going to start with the second chapter, and with the second chapter, we're going to begin the actual discussions relating to accounts. Now, what is before I start solving problems and before I do all this, a few things that I would like to tell is number one, we've been given a material, right? So I think the accounting process chapter will have only two questions. Other chapters will have more than two questions, but this one will have only two questions because most of it is, I mean, it's easy, it's simple, so we will not discuss too much from here. We'll solve one comprehensive question, but you already got this material, the questions, two questions on accounting process. So we'll start solving these questions. But before that, I will put in some slides and we will just look at the slide, look at the basics and go ahead. Now, I'm not going to give you time to write notes specifically. So what I would advise you to do is maintain the running notes, write whatever is important. And I think the recorded videos will be available. So if you're really wanting to write notes, you can sit later and write notes. But most of it will be there in your textbook or your regular class notes. We would have covered it. So as much as possible, just pay attention and listen. So if you're getting any questions, you can make a note of it and keep it ready. After the session we can discuss it. And also I think we have doubt clearing sessions in the evening, so you can come up with those questions in the evening if I forget to solve some doubt in the classroom during the class hours. I'll try my best to do it, but some questions which I feel is not required to be answered at that point, I might overlook. So that doesn't mean that I ignored the question. That means it was not relevant to the discussion, because we have minimum time. We don't have too much time, so we need to compress our discussion as much as possible. So I'm prioritizing what is important and what is not important, and based on that we're going to discuss. And most of it will be exam point of view, as I mentioned, exam oriented approach, which is 2 months away from our exams. So as much as possible, let's keep it exam oriented. Let's keep it relating to the exams itself. So my focus also will be that way itself. Okay, now let us start discussing chapter number 2, accounting process. As I discussed earlier, as I told you earlier also, this chapter is not so important for our exams, because simple question will be asked from this chapter if they are going to ask. So far, they've asked only once. That is in the latest attempt, they've asked once. There is a chance of this chapter coming again for your exams also for a 4 or 5 mark question, not more than that. Now, why is it important then? It is important because if you don't understand the basics, you will not understand anything in the future. So that is why please pay attention when we discuss this chapter. I'm going to spend some time with this chapter. If you have any questions, you can ask me. Here, mainly I'll focus on how do we give effects in the accounts, because that is what is important for our understanding the future chapters, be it consignment accounts, be it sole proprietor, be it company accounts. Every chapter you can link back to this particular chapter, you can link back every concept to this chapter. So that is why I want you to be paying attention all the time, focus in the class properly, and stay motivated as much as possible. I'm sure it's not going to be easy in the afternoons after a heavy lunch. It's not going to be easy. So as much as possible, be motivated and focus in the class. If you have any questions, please post them in the chat box. Shall we start? Shall we begin, guys? Guys, I want participation. Come on to the chat box. Say yes, no. All right, we are ready to go then. Okay. Some things I'll put first. First, we'll look after some slides. We'll go through some slides, and then we will get into the question solving. Okay. So now, this is the second chapter. So before we start, in the chapter there are 5 units. So this is how our accounting process is. This is what we've seen in the morning also, right? The process of accounting. This 6 steps in accounting. Recording up till communication. I taught you in the morning. We discussed this in detail in the morning, and also I told you about each step. We maintain some records, we maintain some books. What are those called, and all that we discussed in the morning. But just for revision ones, and also to understand how this chapter is, also I'll just tell you. Where do we record? Recording of transactions. Where do we record the transactions? The transactions are recorded in the journal or subsidiary books. So unit 1 of this chapter is journal. Then we classify it to ledgers, classification that is called as ledgers. Then we have summarizing. What is summary called as? Where do we summarize it? Where do we summarize it? It is summarized in trial balance. So that is unit 3. There is one more set of original books of entry, that is recording can happen in 2 books. I told you, one is the journal, and what is the second one? It is subsidiary book. So that is unit 4, subsidiary book. And one of the most important subsidiary book is what? Cash book. So that is unit 5. Separately, we will study cash book. There are 3 types of cash book and all that. I will just go through it here quickly. We will not discuss it in too much detail over here. Now, this much is known as bookkeeping. As I mentioned earlier also, the first 3 steps are known as what, sir? What are the first 3 steps known as? Bookkeeping. So bookkeeping is going to be the same to any kind of entity. Okay, bookkeeping is the same for any kind of entity. Be it a sole proprietor, be it a not-for-profit organization, be it a company, or be it a trust, any kind of organization, the bookkeeping is going to be the same. What will change is the financial statements. The final accounts. The final accounts could be different from entity to entity, organization to organization. That is, these three stages could be different. For example, in the case of NPO, we draw up income and expenditure account. In the case of company accounts, we draw up the financial statements as per Companies Act, Schedule 3. Schedule 3 of the Companies Act, we draw up the financial statements in the case of a company. So the financial statements, the way we draw the financial statements may change from entity to entity, depending on the type of the entity. But the first three stages, that is bookkeeping, is going to be the same for all the types of entities, no matter what the turnover is, no matter what kind of business it is, the bookkeeping is going to be constant. So for bookkeeping, we have these many stages, that is three stages: recording, classifying, and summarizing. So this particular chapter we study as one. It is same for all the kind of entities, all the kind of organizations. The bookkeeping is same. For financial statements, we have different chapters, right? Financial statements of NPO, financial statements of sole proprietor, because financial statements are different. We don't study financial statements of a company here. You'll study it at the next level. But financial statements is different. That is studied later on. But the bookkeeping procedures are the same for any kind of entity. Now, these are the 5 units covered under accounting process, this chapter. All right. So first, what I'm going to focus on is the initial part, and then we're going to just fly through the other ledgers, trial balance, and all is easy. So we will solve one comprehensive problem for ledger, trial balance, and all that. We will not solve separate problems. One problem for everything. I have put question number 2 in your handout as relating to all the the whole chapter. We will discuss it over there, and we will close it. Now, first, journal. What is journal? Journal is the original books of entry. We follow double entry system of accounting. What is double entry system of accounting, sir? Double entry of system of accounting means that we follow dual aspect concept. What is dual aspect concept? Sir, you discussed in the morning, sir. We give two effects in the books. One is known as the debit, and the other one is known as the credit for every entry, every transaction made in the books. Now, I'm not saying I'm going to record it only in two accounts. I'm saying we give two effects to each entry: debit effect and credit effect. Every transaction will have two effects. Minimum 2 ledger accounts will be involved. There can be more than 2 ledger accounts, what we call as compound entries. There could be more than 2 ledger accounts, but minimum 2 ledger accounts will be there. But the effect given for any transaction in the books is going to be equal. We will have a debit effect and we will have a credit effect, which will be equal. The amount debited and credited will be equal. Now, coming to the approaches. Sir, what is this? What do you mean by approaches? Approaches means it's like this. If you have been given, let us say, water. Now I want to drink water. I can drink water in two ways. One, I can put it in a glass and drink water. Second one, I can drink it directly from the water bottle. Right? At the end of the day, water is going into my body itself. So the approaches can be different to drink water through glass or through water bottle, or I can use a straw, or I can do anything. But at the end of the day, it's going into my body. So that is the result. In accounting also, we have approaches. We have approaches. One is the traditional approach and the second one is modern accounting approach. This is just how you approach it. But the result is going to be the same. The entry is going to be the same. The journal entries, the effect given in the books of accounts is going to be the same. So first we will quickly get through the traditional approach. Here we have classified into different types of accounts and all that, rules for accounts, different rules for accounts and all that there. I'll just show you quickly what are these types and all that. So for traditional approach, we have importantly 3 types. We give 3 types. One is the personal accounts, second one is the real accounts, and the third one is the nominal accounts. Personal accounts, real accounts, and nominal accounts. Now, what do you mean by personal accounts? Guys, I just want you to sit back and enjoy and just see and pay attention. Don't take any stress. There is nothing to worry about. Just pay attention and just enjoy it. Don't take too much stress. Now here, traditional approach, 3 accounts I told you. One is the personal account, real account, and nominal account. So what is personal account, sir? Personal account means it is relating to persons. Now, when I say persons, we can have two types of persons, sir. What are the two type of persons? One is a natural person. I am a natural person. Second one is an artificial person. A company is an artificial person. So we can have two persons, natural persons and artificial person. A company, a partnership firm, an LLP, an NGO, a bank. All these are artificial persons. So we have personal accounts, as I mentioned, natural and artificial personal accounts. Apart from this, we have the third category, which is known as representative personal accounts. These are those accounts which represent people. Okay, it is not exactly, you don't take the name of that person, you don't take the name of those persons, rather you will have an account dedicated for them. For example, sir, we have something called as outstanding expenses, outstanding rent. Outstanding rent is a representative personal account. Who is it representing? Who is it representing? It is representing the landlord. The landlord to whom you have to pay that amount, to whom it is outstanding, it represents him. So it is outstanding, or it is representative. The outstanding rent account is known as representative personal account. So whatever these outstanding, prepaid, received in advance, accrued income, all these are known as representative personal accounts. Outstanding salaries. Now, outstanding salaries is what? Outstanding salaries is representing the staff, the employees of the organization. So you don't take every staff member's name and write over here a liability in their names. Rather, we will open one account known as outstanding salaries or outstanding wages, as the case may be, and we will say that this much money is pending to be paid as salaries to our staff, our employees. So that is a representative personal account. Prepaid, expenses. You might have paid some expenses in advance. Again, a representative personal account. So when I say personal accounts, there can be three types. Natural person. For example, if I am, for example, if I'm saying, Adarsh Shenoy's account. Adarsh Shenoy is a person, natural person, bones and flesh. So it is a natural personal account. Artificial means Adarsh Shenoy's firm. Adarsh Shenoy has a CA firm. So Adarsh Shenoy and Associates, it's a CA firm. So now when I'm saying, Adarsh Shenoy and Associates, now that is an artificial person. Bank, for example, Syndicate Bank, Canada Bank, or you have, ICICI Bank, any bank like this, whatever banks you're talking about, these are all companies, by the way. Banks are all companies. Banking companies, these are. So they are all artificial personal accounts. So bank account is not a real account. Many of you get confused. It's not a real account. It is an artificial personal account. So these are different types of personal accounts. Then when I say real accounts, we have two types in real accounts: tangible assets and intangible assets. Sir, good question. What is capital account? Can someone tell me what is the type of capital account? Is it natural personal? Is it personal account in the first place? Capital account? Yes, it is personal account in nature. What personal account is it, sir? It is natural personal account. Okay, we say owners capital account. It is a natural personal account. So is drawings. Drawings is also a personal account. It is a reduction in the capital basically. So that is also drawings itself. Okay. Now coming back to discussing the real accounts. Real accounts, how many types do we have? We have two types: tangible assets and intangible assets. What do you mean by tangible assets, sir? Tangible assets means those assets, those goods, items, those things which you can touch, feel, see is known as tangible asset. What about intangible assets, sir? What do you mean by intangible asset? Those assets which generate income. They are just like the tangible assets. They generate income for the business, but you can't see those assets. For example, sir, patents, trademarks, goodwill, copyrights. All these are the example for intangible assets. Then there is one more set of accounts which is known as nominal accounts. Now, what do we mean by nominal accounts? Nominal accounts are those ledger accounts, those temporary accounts. Nominal accounts are temporary in nature. Okay, you have expense and loss accounts and income and gain accounts. Nominal accounts are closed at the end of each year. Is that true? Nominal accounts are closed at the end of each year. We close these accounts at the end of each year. These are known as nominal accounts. Wonderful. I hope you're getting the flow. How many types of accounts do we have? Three types: personal, real, and nominal accounts. Under personal, how many categories do we have? Three categories we have. What are the three categories we have? Natural, artificial, and representative. Then under real accounts, we have how many categories? We have two categories: tangible and intangible assets. Nominal accounts, we have two categories: expense and loss accounts, and income and gain. Okay. Now the golden rule, not so important. I don't want you to pay attention to this, but just if MCQ questions come, or if true or false, not MCQ, we don't have MCQ, true or false questions come, you might need this. That's all. For only that, I'm discussing this. So when I say, golden rules and a traditional approach, it is like this: types of account, personal account. For personal account, what is the rule, sir? Debit the receiver, credit the giver. Debit the receiver, credit the giver. Sir, can you give me some examples, sir? Of course, I can give you examples. Now, when you're depositing money into the bank account is debited. Okay, don't look at it from the modern approach point of view. Look at it from the traditional point of view. Is bank account a personal account? Is bank account a personal account? The answer is yes. Bank account is a personal account. It is an artificial personal account. Okay. Now, bank is receiving the money. Yes or no? Bank is receiving the money because you're depositing money into the bank. The bank is receiving the money. So that is why you debit the bank account. Debit the bank account because debit the receiver. Debit the receiver. Understood? Next, if we are withdrawing money, the bank is giving you money. When you're withdrawing the money, bank is giving you the money. So bank account is credited in such case because bank is the giver. Bank is the giver. Capital introduced by the owner. When the owner is introducing the capital into the business, capital account is credited. Capital account is a personal account. Owner's personal account it is. So again, capital is credited because owner is giving. Owner is giving. So that is why credit the giver. Credit the giver. Capital account is basically his account. Then you have a real account. Real account rule is debit what comes in, credit what goes out. Can you give me some examples for this, sir? You purchase an asset for cash, let us say. You're paying cash and you're purchasing an asset. Both asset and cash is real account. Tangible assets these are. Let's say you're buying a machine. Machine is a tangible asset. So debit what comes in. Is it coming into the business? The answer is yes. So that is why machine account is debited. Cash is also a tangible asset. I told you, cash is also a tangible asset. Cash is going out of the business. So when the cash is going out, cash is to be credited. Cash account is to be credited. I hope you're following this. Sir, one important question and one important clarification, sir. What about purchase account and sales account? There's a lot of inconsistency relating to this, sir. Purchase and cash account, purchase and sales account, sir. There's a lot of contradiction about this, sir. I think it is nominal account, but in the textbook, if you open your textbooks, you open your 12th standard, 11th standard textbook, you open your even CA textbook, they will show it as real account over there, sir. So what should we consider this as? It is a nominal account. It's a nominal account. Okay, but traditionally they call purchase and sales as a real account for a very simple reason that they treat it as a stock account, or it fits into this rule. What comes in, debit what comes in. So purchase account is debited. So that is why they debit it. And sales is what goes out, so sales is credited, so it fits into this rule. So that is why they call purchase and sales as real account, but with a very strict sense. When you look at it, it's a nominal account. What is it? It's a nominal account, because purchase is an expense. Purchase is an expense, sales is a income. Sales is an income. So these are nominal accounts. So it should fit in the nominal account, which is debit all expenses and losses, credit all incomes and gains. If you say it is a real account, in traditional approach only, you have a rule saying that all the nominal accounts are to be closed. So that does that mean that purchases is to be shown in the balance sheet? No, it is a nominal account itself. Purchases and sales account are nominal accounts. Remember this. So it's just clarification, because you might get confused when you read the textbook. So I just thought I'll say it. Okay, so this is about rules for under the traditional approach. These are the golden rules. Now we will go to the important approach, which is the modern approach. Let's quickly look at the derivation once. Just look at the screen, guys. I just don't want you to think too much about anything else. Just look at the screen once. Here, modern approach first. Do you remember in the morning I discussed one equation? I discussed in fact two equations with you. One I discussed when I was talking about dual aspect concept, right? So dual aspect concept, I told you there's a balance sheet equation. What was that balance sheet equation? It was assets is equal to liability plus capital. Is this right? Yes, sir. Then I discussed one more equation with you. What was that another equation I discussed with you? When I discussed matching concept, right? When I discussed matching concept, I discussed one equation with you. What was that equation? It was, sir, profit and loss account equation. We call it profits is equal to income minus expenses, sir. If the answer is in negative, sir, what is it? It is loss. If the answer is in negative, it is loss. So I discussed this also with you. Now, whose profit it is? Who takes the profit at the end of the year? Do we donate it to someone? Do we donate it to the charity? Do we put it in the bin? What do we? Who do we? Who takes this profits? Who takes this profit? This is taken by the guys. Who takes this profit? Are you listening or are you sleeping? Who takes this profit? The owner takes the profit. You can call him partner. You can call it sole proprietor. You can call him capital. Shareholder, anything you call the owner, he's the owner. The owner takes it. The name of the owner can be different in different places, right? In the case of an NGO, NPO, you can call him a member also. Capital fund we add. So here the owners are taking the profits. The owners are taking the profits at the end of the year. So what we do is at the end of the financial period, the profits are added to the capital of the owner, So we will add profits at the end of the year. As you can see, asset is equal to liability plus capital plus profit. Profit is added to the capital of the owner. So I've just added it. Now what I'm going to do is, I'm going to replace the term profit with the equation. Can we replace it with the equation? I will get something like this. I'm deriving something, guys. Just pay attention when I do this. Why are you doing this, sir? You will get to know. So assets is equal to liabilities plus capital plus income minus expenses. So I get this equation. Asset is equal to liability plus capital plus income minus expenses. Now I don't like negativity. I don't like negative stuff, but expenses minus. What should I do to make it positive? What should I do? Sir, don't wear a mask. It will become positive. I guess that was lame. What do we do? We will take it to the other side. We will take it to the other side. We transpose it to the other side. So we have shifted it to the LS. It becomes LHS. So left hand side, it will become Positive, sir. So assets plus expenses is equal to liability plus capital plus income. So this is what the equation will look like. So assets plus expenses is equal to liabilities plus capital plus income. I wanted to derive this equation. Now, why, sir? Why derive this equation? I'll give you a rule, golden rule for accounting over here itself. I will give you one, and that's it. We are done. If you understand this rule, you can pass any entry in the world. You can understand anything in the world relating to accounts if you understand this particular equation. So, what are the equation you have to remember? Assets plus expenses is equal to liability plus capital plus income. Liability plus capital plus income. Now, asset plus expenses, this side, we will call it the left hand side. What are we going to call it? The left hand side. On the left hand side, whatever you see, if it is increasing, what should we be doing? We have to debit that account. If the LHS increases, we have to debit. That means, sir, if an expense is increasing, if an asset is increasing, debit that expense account and debit that asset account whenever it increases. Sir, could you give us some examples? Sure. You pay salaries. Salary is what? Salary is what? Salary is an expense account. For any business, salary is an expense account. So, when you're paying salary, you're giving cash and you're paying salary, let us say. So, one, expense is increasing, right? There's an expense involved. Salary is increasing. So, what should you do with salary account? You have to debit the salary account. Cash, you're paying in cash. You're paying the salary in cash. What is happening with cash? Cash is also an asset. Cash is an asset. What is happening with cash? Cash is decreasing. So when the cash decreases, what should you do? When the asset or expense decreases, we have to credit. We have to credit. So that is why when the cash decreases, we have to credit. The simple thing to remember, sir, whenever there's an increase in asset or expense, we have to debit that asset or expense account. Whenever there's a decrease in any asset or expense account, we have to credit that account, sir. So this is how simple it is. It is very simple. You just have to remember this particular point. One more example I'll give you. Sir, bank account. Now you have a savings bank account. What is savings bank account for you? Is it an asset, expense, liability, capital, or income? What is a savings bank account for you? It is an asset. You deposit money into your savings bank account. Is it increasing your asset? You're depositing money into the savings bank account. Is it increasing your asset? Yes, sir. What should we do when the asset balance increases? We have to debit. So bank account debit. You're paying it with cash, let us say. So there's a reduction in cash. So that is why cash is to be credited. Bank account debit to cash account. Have you followed this? I hope you have. Now, debtor. Who is a debtor? Have you heard of this term, debtor? Debtor is an asset, right? It is a receivable. We call it as trade receivables. So, what do we have to? Let us say we are debtor is paying you some money. Debtor is paying you some money. Debtor is a person who had to pay you money. Now he's paying you some money. What is happening now? There are two things happening. You just have to recognize what are the accounts involved. Okay, here there are two accounts involved, sir. One, I'm getting cash. Cash is going up or coming down? Cash is going up. So cash account debit. Cash is going up. So cash account is to be debited. Debtor balance. That person is giving you money. So you're right over that person, that debtor who was an asset. Is it increasing or is it decreasing? What is happening? Your right is decreasing, right? Your right is coming down. It reduces. Your asset is coming down. So what should you do? You have to credit the debtor. The entry is very simple, sir. Cash account is debited and debtor account is credited. Debtor account is credited. Are you comfortable with so much? Did you understand this? Okay. Next, liability. When liability increases, what should you do? Now we are going on to the RHS side, the right hand side. Okay, we are going on to the right hand side. On the right hand side, I have liabilities, capitals, and incomes. Sir. Whenever there is an increase in the right hand side, we have to credit it, sir. What should we do? We should credit it. So obviously, when there is a decrease, sir, what should we do, sir? We must debit it. We must debit it. So very simple. Example, sir. Credit sales. What am I saying? Credit sales. You're selling goods on credit, let us say to Ashish. You're selling goods on credit to Ashish. I am selling goods to Ashish on credit. Now, can you tell me what is happening over here? Two things, sir. One, your income is increasing. Your income is increasing. Sir, but cash you did not receive. No, how are you calling it as income when you have not received cash? It doesn't matter. We follow the mercantile system. We follow the accrual system. Have you earned that income? The answer is yes. You have earned that income. So should you record that income? Yes, you should record that income. Should you wait for the cash to be received to record this income? The answer is no. That would be cash system of accounting, not our accrual. In accrual system, what did I tell you in the morning? Accrual system says that you have to record all the incomes and expenses as and when you earn it or when you spend it, when you incur it. We don't wait for the cash to come in or cash to go out to record the entry. So now we have to record this entry. Credit sales is to be recorded. I sold goods on credit to whom? Whose name did I tell? Ashish, right? I sold goods to Ashish on credit. So what is the journal entry for this, sir? One, sales is going up. If sales is an income, sales is going up, what should I do? When the income goes up, we have to credit the sales account. So sales account is to be credited. Wonderful. Sales account is to be credited. Sir, you are also getting a right, sir. You're also creating a right to receive money, sir. Right? Ashish is an asset for me. Ashish is an asset for me. What do we call him? We call him as a debtor. So debtors or Ashish's account debit to sales account. Asset is going up, so asset account debit, Ashish account debit to sales account. Are you all following this? Yes, wonderful. So this is about how the entries are passed based on this equation. Okay, one more I will tell you. This you have to think and you have to answer. Let us say, let us purchases. Okay, purchase of goods on credit. What is the entry for purchase of goods on credit? Purchase of goods on credit from, let us say, Chandana. Purchase of goods on credit from Chandana. What is the entry for this? Purchases account debit. Because expense is being incurred, there is an increase in expense. So purchase account debit to Chandana's account. To Chandana's account. Am I not clear? Someone wrote Sanjana. Did you hear it as Sanjana? I said Chandana. Okay. So purchase account debit to Chandana's account. Okay. So this is the entry. I did not say Ranjana. I did not say Ramesh Anna. What is Ramesh Anna? Okay. Anyway, now this is how we pass entry. We use this particular equation to pass journal entries in the books. Now, as I discussed already, asset accounts, whenever there's an increase, we have to debit it. Whenever there's a decrease, we have to credit it. Asset and expense, the same rules apply. And in the case of liabilities, capitals, and revenue, that is income account. When I say revenue, I'm referring to income accounts. So we have to debit the decrease and credit the increase. Very simple. These are the golden rules under this particular approach. Okay. Now, some things, when you merge two things and analyze a little more, you will remember it for longer, I feel. Is my voice breaking too much? I don't think my voice is breaking at all. Okay. Yes. So now, yes. Now, when we're talking about the different accounts, when we merge these two approaches, I came up with some things so that you can remember it for longer and you can remember, you can link it, and some maturity in this particular part can be attained. Now, first, asset account. Let's mix up the two approaches. Okay, I'm mixing up two approaches. That is, the first was the traditional approach, and then we discussed the modern approach. Now, can asset account be a real account? Can asset account be a real account? Yes, sir. Real accounts are asset accounts only. Under real accounts, we saw two categories. What were the two categories? Tangible assets and intangible assets, right? Tangible assets and intangible assets. So obviously, asset accounts, there will be real accounts. Can personal accounts also be asset accounts? Can personal accounts also be asset accounts? Yes, sir. So can you give me some examples? Debtor accounts. Debtor accounts are personal accounts. Bank account, personal account. Prepaid expense accounts. Representative personal accounts, right? Prepaid expenses. Accrued income. Accrued income. Bills receivables. These are all personal accounts. These are all personal accounts, and these are, if you're talking about companies, you have something called as calls in arrears. Again, that is also a personal account. Calls in arrears is also a personal account, representative personal account. So these are all asset accounts for the business. These are all what? Asset accounts for the business. So when I say asset, it can either be real accounts. Most of the asset accounts are real accounts, that is tangible assets and intangible assets we're talking about here. But there are many personal accounts also, asset accounts also. So when I say asset accounts, it can be real accounts and personal accounts. When I say expense accounts, can expense accounts be personal account? Can expense account be personal account? No. Can it be real account? No. Expense account, specifically we said nominal accounts are expense and loss accounts, income and gain accounts. So expense accounts are always nominal account. It is always nominal account. Wonderful. I hope you all are following this. So expense accounts are always nominal accounts. Sir, what about liability accounts, sir? Can liability account be a real account? Can liability account be a real account? How, sir? Real account, there is a category you wrote. What were the two categories under real account? Tangible asset and intangible asset. Can you tell me a liability being a tangible asset, an intangible asset? Is that possible? No. Liability is a liability. How can it be an asset? Okay, that's ruled out. So liability accounts are not real accounts. Cannot be real accounts. Never can be real accounts. Can a liability account be a nominal account? Again, no. Nominal accounts are what, sir? They are closed at the end of the period. These are expense and income accounts. So it cannot be nominal accounts. Then what is liability account? It is always a personal account. You take any name, I'll tell you it's a personal account. You're talking about bank loan. So personal account. Bank is an artificial person. Bank account. That is a personal account. Bills payable. It's a personal account. Representative personal account. Outstanding expenses. Representative personal account. Creditors. Natural or artificial personal account, as the case may be. So liabilities are always personal accounts. It's always personal accounts. Calls in advance, personal account. So always personal accounts. Reserves, owner's account, it comes under capital actually. So it's always a personal account. Capital account are also personal accounts. Owner's capital, drawings account, capital, owner's capital account, share capital account, whatever account you're calling about, reserves. Reserves are also categorized as capital. So it is always a personal account. Are you all following? Are you all with me? Yes. It's always a personal account. What about income, sir? Income is always dash. Income is always dash. Income is always nominal account. So income is always nominal account. Wonderful. So this is the conclusion. Looking at both of the outstanding expense is a personal account, representative personal account. Okay, so this is the conclusion relating to all the accounts. Asset accounts are always real and personal accounts, real or personal accounts. And expense accounts are always nominal accounts. Liabilities are always personal accounts. Capital is always personal account. Income is always nominal accounts. Okay. So I hope you have followed this. There's increase in capital, there's increase in assets. There are two different things we got. Okay. Outstanding is pending, Kaiser. Okay, now this is about journal. We know the format of journal and all, but I wanted to discuss the basics. Now, what I will do is you have a homework question, right? It's actually a question to be solved by yourself, okay? But I'll be a little shameless and mean, and I will discuss the question in the class. You will solve it. You will solve it. Don't solve it now. But I'm just going to being shamelessly, I'm barging into your homework question, and I'm going to discuss that question in the class. What, sir? Unfair. Okay, let's do it. I do unfair things all the time. Okay, let's start. Shall we? Shall we? Shall we? Yes. I'm not going to write a thing. I'm just going to discuss. I'm just going to say, speak. You're just going to listen and you're going to solve it after the class is over, not now. After the class is over. Very simple question. No hype. Put to question. Okay, let's start. Started the business with cash. Okay, journalize the following transactions of Mrs. Mallika Fashion House. We don't have a habit to read the first line at all, right? We directly jump into the question. Anyway, journalize the following transactions of Mrs. Mallika Fashion House. So they have given started the business with cash. What is this? What is this? This is introduction of capital into the business. So there are two things happening in this. Always remember, you have to look at the different factors or accounts involved over here. Here, two accounts are involved. What are the two accounts involved over here? One is the cash, and second one is the capital. Cash and capital. Cash is going up. Cash is an asset. Cash is an asset. Cash is going up. So cash account debit, right? Cash account debit, because cash is an asset. Asset, when it increases, we have to debit cash. We have to debit that asset. So cash account debit to capital. Capital introduction. So capital is also increasing. Capital is also increasing. So capital is to be credited. The entry is cash account debit to capital account. Is this clear? Cash account debit to capital account. Owner's capital, Mallika's capital account. Opened a bank account with Syndicate Bank, 80,000. What about this? Bank account is debited. Bank is another asset. It is increasing. Bank is an asset account. It is increasing. So bank account debit. Cash is an asset which is coming down. So cash is to be credited. So the journal entry is bank account debit to cash account. Purchased goods on credit from Gulmohar Fashion House. What is the entry for this? You're purchasing goods on credit. So there is purchases of goods on credit, and the entry is purchases account debit to Gulmohar Fashion House account. Okay, purchase account debit to Gulmohar Fashion House. On credit they have given. So sorry for this mistake. There is no amount involved. You can write your own amount, right? Whatever amount you feel is good. Let's say 50,000 rupees. Oh, 30,000. They have given that Gulmohar Fashion House, we paid 30,000. You can link that. You can write 30,000 rupees. 30,000 rupees you can assume. Okay. because they have given that you paid 8th point Gulmohar cash paid to Messrs. Gulmohar Fashion House 30,000. So take that same amount. Purchase of office machines paid by check 30,000 rupees. What is happening over here? You're purchasing a machine. Is this capital expenditure or revenue expenditure, guys? Purchased office furniture, CE or RE? It is capital expenditure. You're purchasing an asset, a machinery. So machinery account debit, asset is going up. So machinery account debit to bank account. Why are you crediting bank, sir? We are crediting the bank because your asset is going down. Your another asset is going down. Bank is an asset, it goes down. And they have said buy check. So bank account is to be credited. So what is the entry for this? Machinery account debit to bank account. Understand, link it to that rules that you just studied. LHS, RHS, fit it into that and study like that only. That will give you more clarity and it will kind of strengthen your basics. It will strengthen your basics. Okay, going forward. Rent paid by check. What is happening over here? Are you incurring an expense? Yes, sir. Rent is an expense. Is the expense going up, sir, or is the expense coming down, sir? Rent is going up, expense is increasing. So when expense increases, what should you do? You just remember this this equation: asset plus expense is equal to liability plus capital plus income. Increase debit, decrease credit. Are you all paying attention? Are you all with me? Then here on this side, when it is increasing. Okay. Now here when I say rent, paid by bank, through a check, I'm paying through a check, right? So rent is an expense. Rent is an expense. Rent is going up, so we will debit rent account. And cash, what is, or bank, you're paying through a check, right? So bank is what? Bank is also an asset. Bank is coming down, so we have to credit the bank. Sir, are you insulting us by discussing this much into detail? I am discussing this because there could be some of us who are not comfortable with this. That's why. Okay. Received a check from Mrs. Mohit Bros 10,000. Received a check from Mohit Bros 10,000. What is the entry for this? You're receiving a check, bank account debit to Mohit Bros. Sir, can I say cash account debit? In the cash book, if it was a cash book problem, we would have said cash account debit. Okay, but this is generally given, so bank account debit. We will say bank account debit. In this case, sixth point I'm discussing now. So that was sale of goods on credit. Oh, I did not discuss the sixth point, right? Okay, sixth point is sale of goods. Easy it was. What was sixth point? Sale of goods and credit to Mohit Bros. What is the entry? Here, two things are happening, sir. One is sales, income. We are earning an income called sales. Income is going up or coming down. Sales, jasti aagta unta, kadme aagta unta. Is it going up or coming down? It's going up, right? So when income goes up, what should you do with the income account? You should credit the income account. And Mohit Bros are an asset or liability now. What is Mohit Bros now? Is it an asset or liability? It is an asset. Mohit Bros is an asset. He's a debtor. Is it increasing or coming down? It is increasing. So what is the journal entry for this? Mohit Bros account debit to sales account. Mohit Bros is debited. So that is why Mohit Bros account is to be debited and sales account is an income account. It will be credited. Cash sales, very simple. Cash is coming in, or cash is an asset, it is going up. So increase in asset, cash account is debited. Sales account is an income account, increase in sales, increase in income. So credit sales, cash to sales. Cash paid to Gulmohar Fashion House. What is this entry? Cash paid to Gulmohar Fashion House. So we are paying cash. Gulmohar Fashion House, if you remember, we had purchased from Gulmohar Fashion House on credit. what were the what was it? It was a liability to us, right? It was a liability to us. It was a creditor. It was a liability. Now, when you're paying cash, is your liability coming down or is your liability going up? Your liability is going down. Okay, your obligation towards Gulmohar Fashion House is coming down. So when a liability goes down, what should you be doing? What should you do when the liability goes down? You should debit it. So Gulmohar Fashion House account is debited, and you're paying cash, right? Eighth point, you're paying cash. So cash is an asset coming down. So we have to credit cash. We have to credit cash. Received a check from Messrs. Mohit Bros. Mohit Bros was an asset earlier, if you remembered. We had sold goods to Mohit Bros on credit. He's paying us a check, or he's giving us a check. So bank account debit to Mohit Bros account. Bank account debit to Mohit Bros account. Bank, because your balance in the bank account is going up, and Mohit Bros is credited. Sir, if you're following triple column cash book, I would say cash account debit first. When we receive the check, we debit the cash account first generally. And then when we deposit the check, we say bank account debit to cash account. That is also followed when we have a triple column cash book problem. But this is not a triple column cash book problem. This is a general problem. Every time, other than cash book problems, please pass the entry bank account debit to Mohit Bros account. Just keep this in mind. Bank account debit to Mohit Bros account. I hope you have followed this. This is crystal clear to all of you. I hope. We should move ahead to the next one. Guys, are you following the discussion or am I talking to myself? Okay. Now, salaries paid in cash. Salaries paid in cash. What is the entry for this? Salary is an expense. So expense is going up, salary is debited, salary account debit. Cash is an asset. Asset is coming down. Asset is coming down, right? Asset is coming down. So when the asset goes down, what should we do? We have to credit. So the entry is salaries to cash. Salaries to cash. Okay. Next one, sold goods to Ramnath, 5,000. Sold goods to Ramnath, 5,000. What is the entry for this? Ramnath's account debit to sales account. Ramnath is a debtor. Asset is going up. Right to receive money is going up. So asset account is to be debited, or Ramnath's account is to be debited over here. So Ramnath's account debit to sales account. Sales account is an income. Income is going up. So sales account is to be credited. So Ramnath turned insolvent and 60 paisa in the rupee was recovered. Does this mean that you received 60 paisa from Ramnath? Does this mean that you received 60 paisa from Ramnath, or does it mean something else? This means that for every 1 rupee owed by Ramnath to you, he's able to pay only 60 paisa. That means you can consider this as 60% also. 60 paisa on the rupee means 60%. 60%. How much did Ramnath owe you, by the way? How much did Ramnath have to pay you? He had to pay you 5,000. 5,000 into 60%. How much do you get that as? 3,000. So how much cash is he paying you? How much of the cash he's paying you? He's paying 3,000 rupees in cash. So cash account debit 3,000. Is there a loss? Have you made any loss because of this? Yes, you made a loss. He had to pay you how much? 5,000 rupees. But he's paying you only how much? 3,000 rupees. So there's a loss of how much? 2,000 rupees. What do we call this 2,000 rupees loss as? What is the name we've given to this loss? We call this as bad debts. This is known as bad debts. Okay. This is spoiled, not going to receive. The debt is not going to be received. So it's known as bad debt. So it's a loss account. Categorize it as an expense or loss account. It comes under the same category. So loss is going up, loss is increasing, or is loss decreasing? What is happening with the loss? Loss is increasing up. So when the loss increases or an expense increases, what should you do? You have to debit. So the entry is if I have to pass one single entry for the whole transaction, compound entry we call it. The entry is very simple: cash account debit, 3,000 rupees. Bad debts account debit, how much? 2,000 rupees to Ramnath's account. Sir, why are you crediting Ramnath? We are crediting Ramnath because we had an asset, right? We had an asset known as Ramnath. Now that asset is coming down, completely coming down. It's going to zero. 5,000 was the amount receivable, but now you can't receive it because there's an anticipated loss. Bad debt is a loss. We are recognizing that loss in the books. So we are recording that bad debt loss. So Ramnath's account is to be credited. So the journal entry will be cash account debit, bad debts account debit to Ramnath's account. Okay, next one, Ramnath, whose bad debt was written off, whose debt was written off as bad, pays rupees 1,000. Ramnath is coming back, undertaker. Okay, Ramnath is coming back and paying you this money, 1,000 rupees. What is the entry now? Should you say cash account debit to Ramnath's account? No. When you do that, you're booking a liability towards Ramnath, right? You're saying cash account debit to Ramnath account, you're actually writing it as a liability. Is that correct? Does that make sense to you? No. You're receiving cash, so cash is to be debited. Cash is to be debited. Cash account debit. Cash account debit. To bad debts recovered account. We open an account known as not bad debts. We don't credit bad debts. We credit bad debts recovered account. To bad debts recovered account. So the entry is cash account debit to bad debts recovered account. This is an income account. Bad debts recovered as an income. It's more like a gain account. So cash account debit to bad debts recovered account. Have you followed this? Have you followed this? So what is the journal entry for the 13th one? 13th one, what is the journal entry? Cash account debit. Cash account is debited because you're receiving cash, 1,000 rupees, to bad debts account, bad debts recovered account. So that is why bad debts recovered is to be credited. Bad debts recovered is an income. I hope I'm clear on this. Many of you get confused over here. So I hope we don't have to credit Ramnath's account. We're not crediting Ramnath's account. You're doing a crime if you're crediting Ramnath's account. I will jail you if you're crediting Ramnath's account. You have to credit bad debts recovered account, not Ramnath's account. Why will you credit Ramnath's account? It's already closed. You already closed this account. You said, I'm not going to anticipate any money from this fellow anymore. You closed Ramnath's account. So Ramnath's account is to be not credited or debited over here. We credit bad debts recovered account. Investments purchased. Investments to cash or bank account. Investments to cash or bank account. Investment is an asset. Investment is going up. So investment, when an asset goes up, investment account is debited. So investment account debit to cash or bank account. That is another asset is coming down. That is why we have to credit the cash or bank account. I hope you followed this. So cash or investment account debit to cash or bank account. 15th one, above investments sold at a profit of 2,000. 2,000. Can you tell me how much sales, what is the sales price now? How much am I selling it at? I purchased it at 30,000. How much are we selling it at? We are selling it at 32,000. That is 30,000 plus 2,000 rupees of profit. So we're selling it at 32,000 rupees. Now what is the journal entry for this to record this? Cash or bank account debit. How much are you receiving? 32,000 rupees. So 32,000 rupees is debited to cash or bank account. To investments. We have to credit to investments. Full 32,000 will we credit? No. How much do we credit? We credit only 30,000 rupees. We credit 30,000 rupees. What about the 2,000 rupees, sir? Profit on sale of investment. We call it as profit on sale of investment. Okay, so we credited 2000 on profit on sale of investment. So the entry is, should I write the entry? It will be insult to what I told, but it's okay. What did I tell you? Cash account is debited. 32,000 rupees we debit cash to investment. See, investment, you had recorded this asset at what price? You had recorded this asset at 30,000 because you purchased it at 30,000 rupees. So to investment, 30,000 rupees. You're selling this. So we pass an entry to profit on sale of investment. Sir, can I write profit and loss account instead of profit on sale of investment? No, not advised. Why are you saying this, sir? Profit and loss account is a statement which is prepared at the end of the year. It is prepared at the end of the year on 31st of March or 31st of December. When we are closing the books, we open profit and loss account. So we put as soon as we sell, we have to credit this account called profit on sale of investment. Later on, this account is closed by transferring the balance in this account to the profit and loss account. Okay, if you say profit and loss account, technically it won't be wrong, but we close this account by transferring to the profit and loss. We pass this entry later on at the end of the year. This entry is passed at the end of the year on the last day of the year. Even if it's sold on the last day also, we always pass it through this account itself. Okay, so I hope you understood these entries without any problem. Now, next one. Goods lost by fire. Now, this is something that I want to discuss. Goods lost by fire. There are certain situations where we credit the purchase account. Okay. There are certain situations where we credit the purchase account. When are these situations? If any of these events happen, or it can be beyond this also, but generally when these events happen, we credit the purchase account. What are the different events, or what are the different transactions, sir? If the goods are lost by fire, see, just remember, if you have purchased goods and you're not using it for the intended purpose. Now, a trader, why would he buy goods? Why would a trader buy goods? For selling it, right? He would buy goods for selling it. So if you're using those goods for any other purpose, any purpose other than the intended purpose, that is other than sale or other than production, manufacturing. If it is raw material, you would use it to manufacture. If you're not using it for that intended purpose, but if you're using it for some other purpose, then we credit purchases. We say purchase is a direct expense. So when you're using it for some other purpose, we credit it. We say it is not being used for that intended purpose. So that is why purchases is credited. We say reduction in direct expense, we'll book another expense account. In the case of goods lost by fire, we will book another indirect expense account. So we'll reduce one expense and we will increase another expense. Purchase is a direct expense. We call it as a direct expense. If you have studied sole proprietorship, you would know this. We'll discuss it over there also. Purchases is a direct expense. It comes in the trading account. Anyway, so that is why the purchases is credited in these cases, because it is not being used for intended purposes. Intended purpose was to either sell it in the market or to use it in the production of finished products. But if you're not using it for any purpose, any intended purpose like that, then we have to credit purchases. So if the goods are lost by fire, what is the entry if the goods are lost by fire? You say goods lost by fire account debit to purchases account. Goods lost by fire account debit to purchases account. Free samples distributed. You're distributing free samples. When a new product is being launched, generally they give samples, right? Dharmakotta, they'll give it for free for you. What is the entry in such cases, sir? Free samples, we call it as advertisement. So advertisement expense account debit to purchases account. Advertisement expense account debit to purchases account. Charity also, if you're giving it for charity, charity expense account debit to purchases account. Drawings, when he's withdrawing goods, when he's drawing goods, the owner is drawing goods. In such cases also we debit the drawings account and credit purchases. So drawings account is debited and purchase account is credited. So drawings account debit to purchases account. Okay, drawings account is a capital account. So there is reduction in capital. So that is why we are debiting the drawings account. Drawings account is a capital account. Remember that. So reduction in capital. So that is why drawings account is to be debited. So drawings account debit to purchases account. Goods used in construction of a fixed asset. What is the entry for this? You're using some raw materials or you're using some materials for construction of fixed assets. Sir, can you give me an example? Sir, a dealer in paint, or a dealer in bricks, or a dealer in sand, he might use his own goods which he had bought for selling for making a building. In such cases, what is the entry? Fixed asset account debit, that is the building account debit to building account debit to purchases account. To purchases account. I'm a dealer in air conditioners. I'm using some air conditioners for my office. I need some air conditioners for my office. Now, will I purchase air conditioner from another competitor of mine? No. I will take those air conditioners from my godown only and I will put it in my office. So in such cases, we have to pass an entry saying that air conditioners asset account debit to purchases account. We're reducing the purchases, we're crediting the purchases in these cases. Is this clear to everyone? Have you followed these different cases? You can have more cases than these also. This was just a list I gave. In the case of consignment, I will discuss about this again over there. When you send goods on consignment to someone else. So in such cases also we credit purchases. But generally, these are the different cases where we credit purchases. So coming back to this entry, what is the entry for this now? Goods lost by fire. What is the journal entry for goods lost by fire? Goods lost by fire account debit to purchases account. Goods lost by fire account debit to purchases account. Cash withdrawn from bank by the proprietor for personal purposes. Cash withdrawn from bank by the proprietor for personal purposes. Drawings account is debited to bank account. Drawings account debit to bank account. Drawings is debited because drawings is a reduction in capital, right? It's a capital account. There's a reduction in capital. So drawings account is to be debited. Drawings account is to be debited to bank account. To bank account because our asset bank is coming down because it is withdrawing money. So that is why bank account is to be credited. The entry is drawings account debit to bank account. Ramesh pays advertisement expenses on our behalf. 2000 rupees. What is the entry for this one? Advertisement expense. Advertisement expense is to be debited. Advertisement expense account debit to Ramesh account. Advertisement expense account debit to Ramesh account. Advertisement expense is an expense. It's going up. So when expense goes up, we have to debit that expense account. Ramesh, what is the nature of Ramesh's account? Can you tell me where does Ramesh account fit in? Ramesh account is a liability. Ramesh account is a liability. Your obligation is increasing, right? Towards Ramesh, the obligation is increasing. So the entry is Ramesh's account. Advertisement expense account is debited and Ramesh's account is credited. Ramesh's account is to be credited. So advertisement expense to Ramesh's account. I hope you have followed this. Understood? Okay. Can I go ahead? 19th one. Okay. Proprietor withdraws goods. Yes, yes, Omkar. Proprietor withdraws goods from the warehouse for personal purposes worth 3,000. Drawings account debit. Drawings account debit to purchases account. Drawings account debit to purchases account. I just discussed this with you, right? Whenever he is withdrawing goods, we have to credit purchases. If the goods purchased are not used for intended purposes, intended purposes what? Selling or using it in manufacturing. If you're not using it for that purpose, then credit purchases, please. So we credit purchases whenever the goods are not used for some intended purposes. This was not intended. We did not purchase the goods in the business for the owner to withdraw it for his personal purpose. That was not the intention. When we purchased it for selling. So in such cases, we have to credit the purchase account. Personal expenses of the proprietor paid by the business. What is the entry for this? Drawings account debit, very good. It is again reduction in capital, right? Reduction in capital. So drawings account debit, drawings account is to be debited, and capital account is to be capital. Which account is to be credited? Cash or bank account is to be credited because you're paying money, so your cash or bank is coming down. So the entry is drawings account debit to cash or bank account. I think you can pass the entries on your own after the class is over. So please do it on your own later on. Now, quickly, some pointers that we get confused is when it comes to sentences. I'll put some sentences. You have to tell me if it is cash transaction or credit transaction. Ready? I'll put some sentences. You have to tell me if it is cash transaction or credit transaction. Purchase. Purchases from A for cash. Sir, stupid. It's cash, right? There is no confusion about this, sir. It's easy peasy. It is cash transaction. Purchases from A. What is this? If it's just mentioned as purchases from A, it is a credit transaction. Remember, it is a credit transaction. This is an assumption we make actually. It's not, the sentence is incomplete. So we assume it like this, and this is the natural assumption. You can't assume otherwise. You have to assume it like this. Compulsorily, you have to assume it like this. Sir, I will give a note, sir. No, you have to assume it like this because that is how the institute also, that is how generally it is accepted. When they just mention purchases from A, it is to be assumed as credit transaction. Just purchases. Purchased goods. Purchased goods. Purchased goods and the kotadar. What should you assume this as? We assume this as cash transaction unless and until the party names are given. That's we can't open the party accounts, right? Party accounts, if it is a credit transaction, we need the name of that party to record it. So here we have just mentioned purchases of goods or goods purchased. If they have mentioned, we consider it as cash purchases. We consider it as cash purchases. Okay, and then obviously this you can say purchases for cash paid. If they have mentioned it is cash. So all permutations and combinations are done. So don't get confused when they are asking like this. It is applicable for sales also. It is applicable for purchase of machinery also. It is applicable for every other case. So if the party name is mentioned and they haven't given for cash, then we assume it as credit purchases. This one point you have to be careful about. Okay, that's all. If they clearly mention purchase of goods from A on credit, it's a credit transaction. There is no confusion about that. All right, so I hope we are clear on that. A little thing. Now the next one is relating to a whole comprehensive problem. This is. We'll quickly finish this off, and here I will discuss about subsidiary books. I will discuss about cash book also over here itself. Before we enter this problem, let's just quickly brush through or go through what is the cash book and so I'm not discussing exactly in order. I'm kind of leaving the order and going off. Okay, there are three types of cash books. Okay, there are three types of cash book we have based on columns, number of columns. One is known as the simple cash book, two column cash book, and then you have three column cash book. Now, first, before we discuss cash book, what is cash book? What is this exactly? What are we talking about when we say cash book? Now, see, there is. I hope all of you are with me, paying attention to what I'm saying and not sleeping. Yeah. So now listen to this. When I said recording, I'll just discuss some background and then I'll go to cash book. Okay. When I said recording, I said there are two possibilities. I said there are two possibilities. Possibility number one is you can record the transaction in a book called as journal. Second one is when there are a lot many transactions and very big business entity it is, they generally maintain something called as subsidiary books. In the case of big entities, to reduce errors, to reduce the chance of errors, they maintain subsidiary books. Now, journal is what we were discussing so far, just passing the journal entries. You know, one account is debited, another account is credited, directly written in the statement. Then you have something called as subsidiary books. Now, how many types of subsidiary books do we have, guys? How many types of subsidiary books do we have? We have 8 types of subsidiary books. How many types? 8 types of subsidiary books. What are the 8 types, sir? There's a book called as cash book. What does cash book do? What does cash book do? Cash book records all the cash transactions. All the cash transactions. Then only cash books here. What else? What other books are there? Purchase books. What does purchase book record? Purchase book records credit purchases. Only credit purchases. Sir, credit purchases of what? When I say credit purchases, of goods only, of goods and trade. Because if it is machinery, will it come in the purchase book? No, it will not come in the purchase book. Only credit purchases will be entered over here. Then we have one more book called as sales book. This is to record credit sales of goods again. We are recording only credit sales of goods. Sir, what about cash purchases and cash sales? Where will that be entered? Cash purchase and cash sales. You're saying cash transaction it is. Where will be the cash transaction recorded? The cash transaction will be recorded in the cash book itself. So all the cash transactions are recorded over there. Then you have something called as purchases returns book. Where do we record? What do we record over here? Goods returned. That is purchases returned. But remember, only those purchases which have been made on credit. Okay, credit purchase returns only are written over here. Because if you had purchased it on cash, you would have already paid that amount. You would have receive that money back also. You purchase something, you pay cash and you purchase something. Now when you're returning that goods back, will you take that money back or not? You will take that money back, right? Because originally what money you had paid, you will take that money back from the person, from the supplier. So that is obvious. So that will come in the cash book. That will not come in the purchase written book. Then you have something called as sales returns book. What is the sales written book? Same credit sales is to be written over here. Whatever goods you had sold on credit and then you are returning it, you are receiving this goods back, then we write it over here. Then you have two books relating to bills of exchange, which is bills receivables and bills receivable and bills payable book. Apart from this, there is one more book to record miscellaneous transactions. Can you tell me what is that book to record miscellaneous transactions known as? Journal proper. It is known as journal proper. Wonderful. This is to record the miscellaneous transaction. Now, with this much background, we can discuss the different kind of books. First, we will discuss cash book. Now, cash book. How does the cash book work? The three types of cash book I told you, we call it a single column cash book. Write it over here. Single column, double column, and triple column or three column. So in the single column cash book, you have one amount column only, which signifies the cash box. Whatever payments you're making through the cash box will come in the rupees column of this particular single column cash book. All cash receipts and cash payments will come over here. Can you tell me where will the cash receipts come? This is like a ledger account. Okay, where will be the cash receipts come? Debit side or credit side? It will come on the debit side. Where will be the credit, or rather, where will be the payments shown? The payments will be shown on the credit side. So sometimes we call this as receipt side. The debit side is known as the receipt side, and the credit side is known as the payment side. We call it popularly as the receipt side and the payment side. So this is a single column cash book. Here only the receipts, cash receipts and cash payments are recorded. Are bank transactions recorded over here? The answer is no. Then you have double column cash book. In the double column cash book, we have one additional column. We have one additional column in the double column cash book, which is the discount column. Now, this is a little different from what you've studied in your 12th standard, in your second PUC or 11th standard, right? You had this in your 11th standard. So in 11th standard or first PUC, you studied it as, double column cash book means cash column and the bank column. But here it's not like that. Here we study it as cash column and discount column. So cash column and discount column in the double column cash book. So discount column, can you tell me, sir, this is discount received or discount allowed? Discount received or discount allowed? This is discount allowed. This is discount allowed. See, when someone is paying you money, let us say RL had to pay me some money. RL is paying that money. Can you tell me what is the entry when RL is paying the money? Let's say RL had to pay me 600 rupees. What is the entry when RL is paying me 600 rupees? Cash to RL. Here I will write cash to RL. He's paying me 600 rupees. Now let us say he doesn't pay me full 600 rupees. He's not paying me full 600 rupees. Rather, RL has paid me 550 and I have given him a discount. I've given him a discount of 50 rupees. So here what should I record? 550 and here only I record discount also of 50 rupees. So RL's account is credited with 550 and 50 towards discount. So the entry is like this. We pass the entry over here itself. So can you tell me now, this is expense, this is discount allowed, or this is discount received for me, for others, for me? Is it expense or income for me? It's an expense, right? It is discount allowed, it is an expense. So I am giving this, I am recording this in my books. So for me, it is an expense, it is discount allowed. What is this? Discount allowed. Hope all of you are following this. So this is an expense, discount allowed us on the debit side. So you can remember like this also, that sir, expense is debited, discount allowed as an expense. So that is why on the debit side only we have written this. What about this then? This is discount received. This is discount received. This is an income. We record it on the credit side. So just remember this much. This is about the double column cash book. We have two columns. Triple column cash book. We have one additional column. Apart from the two columns, we have one more additional column. What is that column towards? That column is towards the bank. That is towards bank. So for all the bank transactions, we have the we have one more column, which is known as the bank column. Okay, that's it, guys. Bank receipts are recorded over here. Bank payments are recorded on the credit side. I hope all of you are comfortable with this. Nothing more. And there's a concept of contra entry over here, which I will talk about a bit later. But this much you just understand so far. So triple column cash book, three types we have. Then apart from this, you have something called as the petty cash book also. If you remember, we studied this. Petty cash book. Petty cash book is a different system altogether to record all the small payments, small receipts, small payments generally, the expenses. We will maintain a petty cashier who's just paying for small expenses. The main cashier is not troubled. So we appoint a new cashier, a small payment cashier. He's known as the petty cashier and he pays all the petty expenses, small expenses. Okay, so that is a different, you can have this single column, double column cash book. In addition to that, you have an additional cash book for small payments. Okay, I think this much knowledge is enough. Now we will get into this problem and we will solve question number 2 in the class. Are you all with me? Now, here what we're going to do is, as you can see, they have given one question and they have said, prepare the following. I'm directly looking at the end. Prepare the following. They're saying prepare subsidiary books, ledger accounts, and trial balance. We'll just stick to subsidiary books first. Let us see what and all subsidiary books we need. Let us read every transaction given over here and let's decide. Capital introduced 24 lakh. What is this capital introduced now? Which subsidiary book are we recording this in? We need a subsidiary book for recording every transaction. Okay, so we have to open different subsidiary books. So can you tell me what subsidiary book we record this in? Capital introduced. We have 8 subsidiary books. What were the 8 subsidiary books, guys? Cash book, purchase book, sales book, right? Purchase written, sales written, bills payable, bills receivable, journal proper. Capital introduced, where is this going to come? This is going to come in the cash book because he's introducing money, he's introducing cash. This is a cash transaction. So first book we need is what? A cash book. We need a cash book to record this. Furniture purchased worth 3 lakh. We are purchasing furniture. Where are we recording this? Which book? Original book. Is it going to purchase book? Will we record this in the purchase book? No. Is this a cash transaction or credit transaction? Look at the sentence and tell me, is it a cash transaction or credit transaction? What rules did I tell you? How do we interpret when party name is not given? How do we interpret it as credit transaction or cash transaction when the party name is not given? It's a cash transaction. I clearly mentioned, right? Purchases of goods kottadare. Here they have given purchase of furniture. You only told me that time. Purchase of furniture. What should we consider purchase of furniture? It is cash transaction. Why is there a doubt? It's a cash transaction. So which book are we recording this? Which subsidiary book are we recording this? We are recording this in the cash book. Have you already prepared the cash book? Yes. For capital also we needed the cash book. Cash purchases worth 2 lakh rupees. Cash book. No doubt about this. Cash book. Sir, one interesting question. Sir, what if furniture was purchased for credit? Which book will be entered? Credit purchase of furniture. Journal proper. Okay. Furniture purchase on credit, journal proper. Sir, will it come in purchase book? No. Purchase book only goods will come. It will not, we will not enter any furniture, assets and all is not to be entered in the purchase book. Trading goods only. Credit purchases from Hans, 50,000. Where will this appear? This will appear in the purchase book. So we have to open a purchase book also. Cash sales, 3,50,000. Cash book. This will appear in the cash book. Wonderful. Credit purchases from Mr. Rajat. Purchase book. We have already opened purchase book, so it will come in the purchase book. Credit sales to Raman. Raman. Credit sales. Which book will this come? Sales book. Only one subsidiary book it comes in. Okay. So this will come in the sales book. Credit sales to Amir. Sales book. Payments made to Hans and Rajat. Payments made. Which book? Cash book. You're paying cash, so it will come in the cash book. The following payments received from Raman and Amir. Cash book. That will also appear in the cash book. The following expenses were incurred and paid for during the month. Advertising expense, salary, rent. You're paying expenses. You're paying for expenses. Is it a cash transaction? Yes. Where will the cash transactions appear? Cash book. So this will also appear in the cash book. The balance amount from Raman was not recoverable as he turned insolvent. It was written off as bad. Okay. Full amount was not recoverable, it seems. What is the entry for this? Where will this appear? Which book? This will appear in the... Will it appear in cash book? No. Will it appear in purchase, sales, purchase written, sales written, bills payable, bills receivable? Will it appear in any of these books? No. So if it doesn't appear in any of those books, which book are we going to record these entries in? This will be recorded in the journal proper. So this will appear in the journal proper. So how many subsidiary books should we open? Did you make a list of all how many subsidiary books we have to open? Should we open all 8 subsidiary books? No. How many subsidiary books should we open? Cash book, purchase book, sales book, and journal proper. So cash, purchase, sales, and journal proper. Okay, then they have asked us to prepare the ledger accounts and trial balance. So I'll cover the whole thing in this problem itself. We will cover everything here itself. So we have to open these 4 books, subsidiary books required to be opened: cash book, purchase book, sales book, and journal proper. So I have the formats ready. I just have to go on filling it over here. So cash book, I'm going to draw a single column cash book because they have not given any bank transactions and all that. So we will assume it is single column cash book directly. So single column cash book I have drawn up. Shall we start filling it in? Capital introduced. Now, one by one, I have all the subsidiary books opened, purchase book opened, sales book opened, even journal proper is ready. So I'm just going to fill in every transaction into these books. Capital introduced. Where should we record this capital introduced? It will come in the cash book. So I will write over here. For the business, it is receipt, right? We are receiving it. and it is towards capital. So I will write to capital account. To capital account. Date is not given, so I'm leaving that empty, or rather I'll just write 1 over here. Just serial numbers I will write, okay? So to capital account. How much is the money? 24 lakh. 24 lakh rupees. Okay. Then we have next one, furniture purchased worth 3 lakh. Furniture worth rupees 3 lakh. Where will this appear? This will also appear in the cash book again. So we will write over here, buy furniture. We are paying for it, right? Buy furniture. Three lakh. Next one. Cash purchases worth 2 lakh rupees. Where will this appear? Cash purchases, cash transaction. Where will the cash transaction appear? In the cash book again. You're purchasing. So you're paying for it, right? Credit side. Buy purchases. How much was the amount? 2 lakh, is it? 2 lakh rupees. The third transaction. Next one. Credit purchase from Mr. Hans. Where do we record credit purchases in Yava book? Which book? We record it in the purchase book. Let's go to the purchase book. So they have not given any details. What is the serial number I have to write over here? 4. So I'll just write 4. And here invoice number and all is not given, but the party name is given, right? Who is the party? Customer's name. What is the customer's name to whom, or rather, sorry, this is purchases. There's a small change over here. This is not customer. Who is this? Supplier. Okay, this is supplier's name. Make it supplier. And this is customer. This is supplier's name. And this is customer's name. This is a sales book. In sales book, customer's name will appear. Okay, now coming back to this. What was the name of the person? What was the name of the party to whom we sold? It was Hans. Purchased from. We purchased from Hans. So here I'll write Hans. The supplier's name is Hans. And how much is the money? Worth goods is 50,000 rupees. So I'll record over here 50,000 rupees. Details and all I don't have, so I will just write directly 50,000 rupees. Going to the next transaction, the fifth one. Cash sales worth rupees 3,50,000. Where will this come? Cash book. It is cash sales. You're receiving money. So on the credit side, debit side, we have to write. Debit side, we have to write to sales. To sales. How much is the amount we're receiving? 3,50,000. This is, what is the number? 5, is it? 5. Okay. Then credit purchase from Mr. Rajat. Where will this be entered? Credit purchase from Mr. Rajat. This will be entered in the purchase book, Rajat. How much is the amount? 2 lakhs. This is the sixth one, right? Are you all following? Yes. Next, payment received. Oh, before that, here credit purchase done. Credit sales to Raman. Where will this be entered? Credit sale to Raman. Sales book. Let's go to the sales book. Raman. This is 7th. This is 2,30,000. Then credit sales to Amar. Credit sales to Amar. Again, sales book. 8th one also will come in the sales book. So 20,000 we have to write in the sales book. Okay, done. What else is that? Payments made to Hans. Where will this be entered? This will be entered in the cash book. So by Hans, we are paying it. So by Hans, 40,000 rupees. This is with the number 9th one. We'll change numbers over here. We'll keep it 9, 10 like that. Next one, we are paying Rajat. What is the entry when we are paying Rajat? Again, it will be entered in the cash book by Rajat. 1,75,000. 1,75,000. I'm writing the numbers based on the entries, okay? Based on the entry I'm making. So I'm just writing after 9th one, 10th one. I'm writing like that. Did you all follow this? Yes. Next. What is the next transaction? Payment received from Raman. So you're receiving money on the cash book. We will write 2 lakh rupees. 11th. Then 12th one, payment received from Amir. To Amir, how much is the money received? 15,000 rupees. This is 12th one. Next, what else is there? The following expenses were incurred and paid during the month. So all these are expenses. Where will these expenses appear? Again in the cash book, because you're paying money, right? So we have to record all these expenses over here. 13th one is to advertisement expense, 40,000. To, should I write it over here? Am I writing it correctly? Which side should I write it? Should I write it on the other side? By advertisement expenses, by salaries, by rent, is it? These are all payments made, so you have to record it on the credit side. Okay, tell me the amounts. Advertisement was how much? 40,000. Salaries is how much? 24,000. And rent is 36,000. Rent is 36,000. Have you all followed this much? Yes. Okay. One more entry is there, no? We're not done with all the entries. 12th one. The balance amount from Raman was not recoverable as he turned insolvent. It was written off as bad. Can you tell me what is the entry for this? How Raman had to pay you how much money, by the way? Can you just calculate roughly and tell me how much? Look at the 7th point and also read it with the 10th point, 7th and 10th point, you have to read it together and tell me how much is the amount Raman had to pay me. 7th point says that credit sales to Raman was 2,30,000, and 10th point says payment received from Raman is 2 lakhs. So how much balance was to be received from Raman? The balance amount was 30,000 was to be received from Raman. You're not receiving it. What is this called as? What is this called as? This is called as bad debts. This is called as bad debts. Now this, can we record this bad debts in any of the books we have opened so far? The answer is no. It's bad debt. Where do we record bad debts then? It should go to the miscellaneous book. As I mentioned, there's a book for miscellaneous entries. Now, how do we pass over here in the journal proper? This is a book where we record all the miscellaneous entries. How do we record over here? We record a journal entry over here. This is like a normal journal. What you have journal entries, right? Like that only you write it over here. Now we have to write a journal entry. What is the journal entry for this? Bad debts account is debited to Raman's account. Bad debt account debit to Raman's account. How much is the amount? 30,000 rupees. How did we get this as 30,000 rupees, sir? It was nothing but 2,30,000 minus 2 lakh rupees. 2,30,000 was the total money that was payable, balance payable by Raman. So now he's paying only 2,30,000 is to be written off as bad. Are we done with all the entries? Yes. Sir, what about Rajat and Hans? There will be balance in these accounts, right? They have not settled the accounts completely. Can you write this off as discounts? Is this discount? No, we have to pay it to him in the next period. We don't close these accounts. Someone asked me, sir, is it discount? It's not discount. Okay. Now, close one by one each of these accounts, total it up and tell me. Cash book, how much is the total? Which side is more? Payment side is more or receipt side is more? The receipt side must be obviously more. How much is the receipt side total? ₹29,65,000. Is that correct? 29,65,000 rupees. So what I will do is I will write the totals earlier only because there's too much in the bottom, right? So I'll write somewhere over here. Total. How much is the total? 29,65,000 rupees. And can you tell me what is the balance? Balance in this account? ₹21,50,000. Is that correct? 21,50,000. Lata, because Capital introduced this, he's introducing cash. He's putting cash into the business. So that is why it comes in the cash book. It's a cash transaction. Okay, now I have a classic question over here. This was 14, this was 15, right? Okay. I have a classic question over here. What is the nature of this balance? Debit balance or credit balance? Is this debit balance or credit balance? It is debit balance. Okay. This is debit balance. This is known as debit balance. It is an asset. It will have debit balance. And how are you saying this is debit balance? And we've written it on the credit side, right? The RHS side is known as the credit side. We've written the balance on that side. How are you calling it as a debit balance? Sir, which side is more? The debit side is more. So when the debit side is more, obviously the leftovers, the balance is also debit balance only. The leftover is also debit balance itself. The leftover is known as the balance. Balance means what is left over. That is known as balance. So it is debit balance. So to balance brought down when we write it in the next period, next month this is, we write it like this. 21,50,000. Yes. And also this account, the payments cannot exceed the receipts. Remember, there's a cash book. The payments cannot exceed the receipt. This is hard cash. So your payments cannot be more than how much you have. Purchase book, total it up. Total is how much? Purchase book total 2,50,000. Sales book, total it up. The sales book also. I think that is also 2,50,000. Right? Journal proper, nothing to do. No totals, nothing. This was what? 16th, is it? Okay. So I hope you're finished till here. All of you done? Prithvi, entry wise, I'm putting it. Okay, are we done? Yes. Now let us go to the next stage. But just what is the next stage? Stage one done. Stage one done. What were the three stages we discussed earlier? I told you three stages. What are the three stages we discussed? Recording. So have we recorded every transaction given in the question? Have we recorded every transaction given in the question? Yes. What is the next stage? Classifying. Where do you classify? Where do you classify the transactions? The classification happens to ledgers. So now we will open the ledgers. We call the process of taking the transaction from stage 1 to stage 2 as, what is it known as? We call it as posting. Wonderful. It is known as posting. Okay, this particular process is known as posting. Let's do the posting part now. Am I going too fast or are you able to follow? It's very simple stuff, right? Yes. Okay. Now let us go to posting. Now for posting, let us see what are the accounts we need. Ledger accounts we need to open. Can you tell me what are the ledger accounts we need to open? One by one. We are looking at this and we are going to decide. Cash book, purchase book, we're going to look at and decide. Should we open a cash account? Should we open cash account? Sorry. Should we open a cash account? No. Why shouldn't we open a cash account, sir? Why is cash account not required? Because cash account will look exactly like the cash book, don't you think? The cash account will look exactly like the cash book, so we don't have to open the cash account. So now remember, we're coming to an important conclusion over here. When you have the cash book, always remember, you don't need to open a separate ledger account. A separate cash account is not required to be opened when we already out. So no separate ledger is to be opened. Next, capital. Do we need a capital account? The answer is yes. So we need a capital account to post the entry. So capital is to be opened. Second, furniture. Do we need a furniture account? Yes, we need furniture account. Do we need purchases account? Yes, we need purchases account. Do we need sales account? Yes. Raman's account? Yes. Amir account? Yes. Hans account? Yes. Rajat? Yes. Advertisement expense, salaries, rent? Yes. All these accounts are required to be opened. Apart from this, we also need bad debts account in the books, right? We need bad debts account also. So the ledgers to be opened are these accounts. As you can see on your screen, they're just required to be opened cash account, furniture account, purchase account, sales account, Hansa's account, Rajat's account, Raman's account, Raman's, and advertisement and 3 expense accounts and Bandit's account. So we'll start posting, shall we? We will start posting. Here, please pay attention, because if you don't pay attention over here, then you will find the next chapter very difficult, rectification of errors. So always remember, if your basics are strong, only then you'll be able to follow the next chapter, rectification of errors. You don't know what should have been the correct treatment only. How can you look at an error? To look at an error, you need to know what is correct first. If you're calling someone, he's not doing it the right way, or he's not doing it correctly. To say this, if you're saying like this, you should be knowing what is correct then. If you only don't know what is correct, how can you say something is wrong? Right? So you must be knowing the correct thing. Only then you can judge what is wrong, what is right. So to find out what is an error, so you should know what is wrong first, or what is correct first. What is correct first, and then you can tell me what is wrong. So that is why this is important to understand what is correct. Don't ignore this saying. This many students have seen this attitude. This chapter completely skipped. One, because it doesn't come for the exams, so it's not so important. Second one, it's basics. We studied this in 11th standard. But then rectification, we all get stuck. Rectification, we don't know where it is going, what is happening in rectification of error. Because you don't even know what is the correct entries, what is the correct posting. So my request or my tip would be focus on this. I know you're not going to do beyond this. You're not going to work out on your own relating to this, because you will feel it's very silly. But focus when we discuss it in the class at least. Okay, so don't please don't take it lightly. Many of you do it and then regret it. Don't let that happen. Okay, so shall we post? Shall we start posting? First, we need we need a capital account also, right? Forgot to have a capital account. Sorry, capital account is also required. So we need a capital account as well, because capital is also there, right? So capital account is also required. I'll draw it at the end, or we have space over here. Yes. I'm so sorry for this. We need a capital account also. All right, so capital account is required. Let's start with capital account. Shall we start posting? Are you all with me? Yes or no? Draw this a little neatly. Please draw the ledger accounts and just wait for me. I'll come there. Something is wrong with this. Never mind. Okay, now capital account. First, let's start posting. What should we do for posting? Just listen to this. What do we do to post this? We have to credit. Now, remember, in the ledgers, we should have two. We must have two effects. Always, we need to give two effects in the books. One is the debit effect, and another is the credit effect relating to every transaction. Now, about the debit effect, have we given debit effect to some account already? Have we given the debit effect to some account already? Yes. Which account have we given the debit effect to? We have already given the debit effect to the cash book, or this behaves as the cash account also. This is the cash account as well. So cash book or cash account. This is cash book and cash account, both of this. Now, where should we give the credit effect to? We are giving the credit effect to the capital account. So here we will write cash, buy cash. How much is the amount? How much is the amount? 24 lakhs. Did you follow this? We have given the credit effect to capital account. Next one. So every ledger, whenever you're posting an entry, one account will be debited, one account will be credited. Remember that. Second will be furniture. I'll post the furniture because second transaction, that is furniture. Where will this be posted? Furniture account will be debited or credited. What do you think? Furniture is to be debited. So I will write to cash 3 lakhs. Then let's go back to the cash book. Purchases, cash purchases. So it will go to the which account? Purchase account, debit side or credit side? Cash purchases, it will go to the debit side to cash. To cash. Are you all learning how to post entries from the subsidiary book? I'm teaching you how to post entries from the subsidiary books. So I hope you're paying attention. This is not like journal. Journal, it's very easy. This is from the subsidiary book. This is also very easy. But this is from the subsidiary book we are posting. Now, what is the amount? Purchases, how much is the purchase? Cash purchases? 2 lakh rupees, right? Yes. Next. See, we're not looking at the question. Please don't look at the question while you're posting these entries. Look at the original books and post. We're looking at the original books and posting it. So look at the original books and post it. Fourth one, what is the fourth one? It was party accounts. This I will talk about later. Purchase book and sales book posting we'll do later. We'll just post from the cash book right now. First we'll do from the cash book. Sales, where will sales come? Sales, this 2 sales we've written over here. It will be in the sales account. Credit side or debit side? In the sales account. Credit side by cash. What is the amount? 3,50,000. Okay. Then what else is there? We have to record Hans, Raman, Rajat, all this we have to record. I'll keep all these personal accounts aside for now. We will record it, don't worry. Advertisement expense, salaries, rent, I will record it first. So advertisement expense and rent, where will this come? All these 3 expenses will come in the expense accounts. I will come back to the personal accounts of the parties very soon. I have to explain something over there. That's why I'm keeping it out now. Can you please tell me the amounts? 40,000, 24,000, and 36,000. 36,000. Here it is 24,000. Okay. Now I will record the sales book, cash book entries also. First, listen to me how we record from the purchase book, sales book, and all that. Please pay attention when we do this. Now, the total of the purchase book, listen to this very carefully. The total of the purchase book is recorded on the debit side of the purchase account. We have opened a purchase account, right? Do you see a purchase account over here? We opened a purchase account. So whatever total of purchases is there, we directly record it in the debit side of the purchase account. So why do you do this? Why don't you record it separately? Because see, even if you record it separately, what is the journal entry for purchases, credit purchases? What is the journal entry for credit purchases? purchases account debit to party account, purchase account debit to party account. Instead of saying it separately, what we do is we directly debit the purchase account with the total of the purchase book. So the total of the purchase book, in this case, what is the total of the purchase book? The total of the purchase book is 2,50,000. This is taken directly to, it is debited directly to purchases account. So here we record in the purchase account two sundries. Two sundries from purchase book. We record it like this: two sundries from purchase book, 2,50,000. So the total is carried over here. Sir, what about the individual parties? What about these parties? These party accounts are separately. Can you tell me these are liabilities or these are assets for the business? What are these parties? Are these liabilities or are these assets for the business? These are liabilities for the business, right? Because you're purchasing goods on credit from them, that means these are liabilities for the business. What should you do to the liabilities? Is it increase in liability or is it decrease in liability? It is increase in liability. When the liability increases, what should you be doing? You should credit that liability account. That liability account is to be credited. So these liability accounts, that is, we have two liabilities. Who are the two liabilities? Hans and Rajat. We individually credit. We individually credit the two parties. That is Hans and Rajat. How much is the amount? We write buy purchases over here. Even in Rajat's account, we have to write buy purchases. The amounts are 50,000 rupees in Rajat's account, right? Or 2 lakh rupees in Rajat's account. Okay. Is this correct? Or is it the other way around? It is the other way around. Hans was 50,000, right? Yes. And here it is 2 lakhs. So what did we do? What did we do? How did we post the purchases, credit purchases? We took the total of the purchase book to the debit side of the purchase account, and the parties were individually credited. Individually credited. Have you followed this? Because this rule is very important when we do the next chapter, which is the rectification of errors. Please be paying attention when we're discussing this. Similarly, with the sales book also, now we have to post the total. Can you tell me where is the total going now? The sales book total. Where should we take the total of the sales book to? We should take it to the sales account. Which side of the sales account? We should take it to the credit side. Sales account is the income account. So we have to take the total to the credit side of the sales account. It is credited to the sales account. And what about the individual parties? Who are these customers? Is this increase in asset or is this increase in liability? What are these persons? These are assets for the business. It is increase in assets. So what should you do? You have to debit the customers or debit their personal account. These are debtor accounts. So let's do this. Please look at the amounts and help me out with the amount when we go there. Okay, sales account. Here I write buy sundries from sales book. How much is the total? 2,50,000. 2 lakh 50,000. 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 2 lakh 50,0 And in individual party accounts, we have to write here two sales. On the debit side, we record this 2,30,000. And in Amir's account, two sales 20,000. Did you all follow this much? Have you all followed this? Yes. So that is how the posting rules work when it comes to purchase book and sales book. The total is debited to the purchases account, and the total of the purchase book is debited to the purchases account. The total of the sales book is credited to the sales account. The individual parties from the purchase book, these are debited, or this is credited. These are creditor accounts. So this is to be credited to creditor accounts. We have to credit individually to their accounts. The total is debited to purchase account. So if you see, relating to these credit purchases, have we given two effects? Have we given two effects relating to credit purchases and credit sales? The answer is yes. We have given two effects. Purchase book, from the purchase book, what we did was we took the total and we took it to the purchase account. So 2,50,000 was debited over there. And what about Hans and Rajat? We had individually credited those parties. So we have given credit effect of 2,50,000 also. So debit and credit effects have been given in the books for these entries. I hope this is clear. Now we will record these payment entries. We did not record this, no? So we'll record this already. Okay, from the cash book, we will post it. I did not record these four entries. That is 9, 10, 11, and 12. I did not record. So 9, 10, 11, 12. Shall we record? Can you help me out? Yes. Hans's account. What should we record in Hans's account? Two cash. Is it two cash? Yes. How much is it? Amount? To cash, it is 40,000 rupees. And what about Rajat? How much has Rajat paid? 1,75,000 rupees. Raman, how much is Raman paid from the cash book itself? By cash, it's paid 2 lakh rupees, right? How much has Amar paid? By cash, 15,000. So I'm just posting those entries from the cash book, guys. Nothing special, just recording it from the cash book. I hope you understood this. Raman and Amar were credited, and Hans and Rajat were debited with those respective amounts. Now, one more. So we have we recorded all these transactions? Have we recorded all these transactions in the books? Done, right? In the ledger accounts, we have given effect to all of these transactions. Have we given effect to all of these transactions? Purchase and sales book, yes, done. Journal proper, we did not record this yet. From the journal proper, we have to post, right? From journal proper, also posting is to be done. So let's post this. Bad debts account is debited. So we have opened the bad debts account also. In bad debts, we will write to, who was the party? Raman. 30,000, we are debiting it. And in Raman's account, we have to write by bad debts. By bad debts, 30,000. By bad debts, 30,000. Okay, so that's it, guys. This is about all the entries that we had to make in the books. The posting is done. We have recorded each and every transaction. We have given two effects for each and every transaction. Every transaction, either in the cash book or in the ledger account, we have given effects. Now, shall we close this? quickly and tell me the amounts, please. This is 2,40,000. This is 2,40,000. What is the balance? Can you tell me the nature of the balance? What is the nature of this balance? Two balance carried down. What is the nature of this balance? Debit balance or credit balance? Credit balance. Here the total is, here we write by balance brought down 2,40,000. Okay, what is the total over here in the furniture account? 3 lakh. What is the nature of this balance? By balance carried down. It is again debit balance. Oh, I mean, in this case, it is debit balance. This was credit balance, guys. This is capital account. Account will always have credit balance. Okay. 24 lakhs. And this was debit balance. This is an asset account. Asset accounts always have debit balance. What is the total here? 4,50,000. What is the balance amount? By balance carried down 4,50,000. Can you tell me the nature of this balance? Debit balance. Wonderful. Now I have a question over here. If it was at the end of the year, what would you write over here? If it was at the end of the year, financial year, what would you write over here? You would transfer this to trading account. Okay, the amount would have been transferred to the trading or profit and loss account. We would say by trading account, and we would close this account. But this is not end of the year, this is the end of the month, so we have not closed it. What is the total over here? 2 lakh, or rather, is this 6 lakhs? Okay, it's 6 lakhs, and balance is also 6 lakhs. If it was end of the year, we would have said trading account over here also. Can you tell me the nature of this balance? What is the nature of this balance? Credit balance. Hans's account, how much is the total? 50,000 is the total. To balance carried down. How much is the balance? 10,000. Debit or credit balance? It is credit balance of 10,000. So every time a personal account has a credit balance, we call them as a what? If a personal account has a credit balance, what do we call that account as? A creditor's account. This is a creditor's account. Okay, this is a creditor's account. Remember that because it has credit balance. Oh, sorry. What is the total over here? 2 lakhs is the total, right? And what is the balance? 25,000 is the balance. What is the nature of this balance? I'll ask it every time. This is also credit balance. He's a creditor again. What about the total? Is there any balance in Ratan's account? Raman's account? Raman's account, is there any balance? The answer is no. There's no balance because he turned, when the debt turned bad, right? So there's no balance over here. Amir's account, what is the total? 20,000 and 15,000. How much is the balance? 5,000. What is the nature of this balance? Debit balance. The debit side is more than the credit side. We call it as debit balance. Expense accounts. Now remember, if it was end of the year, I would say profit and loss account. I would transfer it to profit and loss account. Here I'm not transferring it to profit and loss account. Rather, I'm writing by balance carried down. By balance carried down. It's an expense account. Expense account always has dash balance. Expense account always has dash balance. Debit balance. Very good. Asset account has what balance? Asset account has what balance? Debit balance. Very good. Liability account has what balance? Credit. Capital. Credit. Income. Credit. Okay. Now this was it. This was by balance carried down 36,000 rupees. The balance brought down 36,000 rupees. Bad debts, again, if it was end of the year, I would transfer it to profit and loss account. This is end of the month, so I'm not transferring it to profit and loss account because it is end of the month. We don't prepare profit and loss account every month, we prepare it every year. It's prepared annually. What is the nature of this balance? Nature of the balance? Debit balance. It's a loss account, it's an expense account, it will have debit balance. It's a loss account. So I hope you have followed this problem so far, right? So now we have one final step. What is that one final step? Preparation of trial balance. Can we go on filling the balances? Have you written it in your books? Are you writing it in your books? The third stage is summarizing. We have to prepare the summary. So can you tell me the balances quickly? I'll go on filling it over here. Again, I missed one account over here, which is capital account. I don't know how this happened. Shouldn't have happened. Okay, capital account. First, cash account. Tell me the balances, please. Cash account has what balance? Cash account is an asset account. Will always have debit balance. How much is the debit balance? Sir, we did not draw cash account. The cash book itself is the cash account, right? 21 lakh 50,000. 21 lakh 50,000. Correct, no? Furniture account. How much is the balance in furniture account? 3 lakh. Purchases account. What is the balance in purchase account? Guys, I want responses. What is this? Just because it is easy, you guys can't take it for granted. I'm telling you, you'll struggle later if you don't take it seriously. 4 lakh 50,000. Sales account, how much is the balance? Debit balance or credit balance in sales account? Credit balance of 6 lakh. Hans's account. Okay, sorry, Harold. You are also right time. Okay. Hans's account, what is the balance? Is it 10,000? Credit balance. Rajat's account. 25,000 credit balance. So this is just a trial balance. I'm just writing the summary. The name of the account is given over here, debit or credit balance. I have to fill it in. This is how trial balance looks like. Okay. Raman's account. I think there's no balance in Raman's account. No balance. Amir's account. 5,000 debit balance. Debtor he's. Advertisement expense. We have 40,000. 24,000 and 36,000. Bad debts account, there is how much? 30,000 rupees debit balance in bad debts account. Just filling in the trial balance, guys. Just writing the balances down over here. Capital account has a credit balance of how much? 24 lakh. Shall we total it up? How much is the total? 30 lakh 35,000 rupees is the total. 30 lakh 35,000 is the total. Okay. Now, this was one method. To prepare trial balance, can someone tell me how many methods do we have? We have 3 methods, okay? Preparation of trial balance, we have how many methods? 3 methods. Method 1 was the balance method, which we just prepared, just writing the balances. The second one is known as the totals method. And the third one is known as the balance cum totals. Now, shall we prepare under the totals method also quickly? We have 1 minute time. I don't think we'll be able to finish now. So no problem, we'll do it tomorrow. You can try it once and you can come the totals method. Balance cum total method, you don't have to prepare, but totals method you prepare. I'll discuss it tomorrow also in the class. All right. So I'll stop the class for today. Thank you. Please revise what was done today and come to the class tomorrow. And also please pass the journal entries for the first question. Tomorrow we are going to deal with the most important chapter according to me in our syllabus from module 1, that is rectification of errors. Okay, so please study rectification of errors basics and just look at it once and come to the class tomorrow. Please understand the basics properly today. Thank you. I think there is a doubt solving session in the evening. If you have any questions about today's class, please come to that doubt solving session. Even if you don't have any doubts, you can attend it and you can know what other people had doubts and you can ask questions over there. Thank you. See you tomorrow. Bye.
Thank you, sir. So students, there will be law doubt clearing session from 5 to 5:30 and 7:30 to 8 there will be accounts doubt clearing session. The timetable for tomorrow is as follows: law 8:30 to 10:30, accounts 11 to 1, maths 2 to 4:30. The details will be shared to you. Thank you. Have a good day.
Bye guys. Have a good day. Thank you, ma'am.